Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny and Bert, the Dividend Diplomats, getting ready to bring you another dividend stock watch list of 3 stocks to buy in the rest of the month of May.
Smash that subscribe button. Give Bert and I a nice thumbs up. We've crushed through 8,000 subscribers. Thank you. We're only 2,000, away from hearing the, all right, brother, we got Bert the Hurt and Lanny because we're going to bring you the WWE impersonation dividend stock battle royal.
Yeah, we are. We're going to bring you a nice showdown. But we got to get to 10,000 first. So everyone, please help us out and subscribe if you haven't. It's the middle of the month, so we thought it'd be a great time to refresh our stock watch list because the market is hot as ever, even though it's been decreasing for the last few days, despite some of the inflation we're running into, the gas shortages. Prior to those days, the S&P 500 still continued to reach record highs. It's insane.
We've had a few red days in a row. About time, because
I know.
Dividend investors were always looking for undervalued dividend stocks to buy. Right now, though, sometimes the stock price isn't dropping for those that you really want it to drop. Because one of these companies, I know Bert has been holding near and dear to his heart. And I know looking at the price right now, it's a lot higher than what prices he's been buying at.
Yeah, exactly, Lanny. So that's why it's as important as ever to continue finding and continue running the metrics. Because, yeah, to your point, Lanny, just because it's red in the market doesn't mean everything's an undervalued stock right now. That's what's fun. So we'll see with these 3 companies. To Lanny's point, I own one of them. And then 2 of the companies are going to be different from some of the ones we've been on there. But when I ran the screener, the metrics just looked right. So why not add them to the watch list?
Right. And I mean, as Bert said, the pipeline hack that happened, shutting down a lot of the East Coast and southern part of the United States, plus the inflation rate just came out. The actual rate was actually over 4%. And it crushed what the consensus estimate was of 3.6%. So the price of goods is right now skyrocketing, which I know everybody has probably noticed. And it's not just at the pump.
A fantastic point, Lanny. Yeah, lumber's climbing. Everything in stores are climbing. It's insane. That's why it's as good of a time as ever to work to continue building that secondary passive income stream.
Pokemon card pricing is just going through the roof. Still battles in the stores. Obviously,
they got to open up those pipelines so they can get the cards to the stores.
Exactly. You had the Dogecoin, upswing to the downswing with Saturday Night Live and Elon Musk. Ethereum still crushing through some record numbers here. So there's a lot of just crazy things happening right now in the market, which has led to a few red days for the S&P 500 and overall market, right, Bert?
Exactly, Lanny. So when I was going through these stocks, let's start ripping through some of these. How did we find these? The usual, we know it. Video above for explanation. The 3 metrics of our dividend stock screener: PE ratio less than the S&P, payout ratio less than 60%, and a history of increasing their dividends, and of course, that 4th bonus yield metric.
So Bert, diving into these 3 stocks that you're looking at right now, obviously you got to lead off with this dividend king. Who is on your watch list right now?
Old reliable. That's right, Johnson & Johnson, ticker symbol JNJ. For all of you that have been following us recently, I talked about how I am following Lanny's weekly purchase strategy where he went to Vanguard. Check out the video above to see the update for Lanny doing it for 10 months. I am now 3-ish months in to my weekly Johnson & Johnson purchase strategy. So it's obviously, again, check out I'll put the article for why I'm buying Johnson & Johnson weekly. But the metrics for Johnson & Johnson continue to look right. Their brands are awesome. They are a solid dividend growth stock. They just announced a big 5% increase in April. A lot of things here are checking the box for J&J. Run through the metrics here quickly. At the time of this video, stock price 168.20, forward earnings 953. That gives you a PE of 17.6. Annual dividend was now increased to 424 after that 5% increase. Gives you a payout ratio with that forward earnings of 45%. And as Lanny mentioned, they're that dividend king, increased their dividend for 58 years with a 5-year average dividend growth rate of 6.14%.
Oh, exactly. I mean, pretty solid metrics, got that perfect dividend payout ratio between that 40 and 60%. the dividend yield as the bonus metric at 2.5%, not too bad, well above the S&P 500. And I'm sure a lot of people's portfolio yields are creeping down lower and lower. So this may be in line with a lot of yield on the portfolio.
Yeah.
Again, Dividend King over 50 plus years of increasing that dividend. I mean, it doesn't get any better than this. And I can't wait to see Bert come out with kind of how his strategy has worked over these last few months. And Bert, I mean, trading at 168, how does this compare to what you've been buying at?
I mean, I've been buying them every week, so it's been creeping up. I started this at 158, 159. Every week it seems to be going up another dollar. So the nice thing is my cost basis is well below the current price right now of 168. That's the beauty of this weekly purchase strategy. So even with that, if I were to add more outside of the weekly purchase, it's still not that far above. And as you can tell, the metrics are still right for J&J as we continue to go through them.
Bert obviously loves J&J, really testing out the Dividend King strategy. But I tell you what, enough of J&J. You've heard us beat this one to death. How about talking about a stock that even I almost fell out of my seat? I was like, Bert, you pretty much gave me sweet chin music, turning the corner here, because I did not expect this one.
No, I didn't expect it either. When I was just running a stock screener, I didn't see this one coming. So when I looked at the metrics, this company is Whirlpool, ticker symbol WHR. No, it's not that big of a reaction, Lanny. If you recall, last month, you actually pointed me to their dividend increase that they had in April. That's kind of what put them back onto my radar for the company. You sent me a text or a message that said Whirlpool just announced a 12% increase in their dividend. So obviously, they're going to be on my mind when I start seeing the metrics.
Bert ran his dishwasher. He just turned on the oven, and he was like, I need to run out and buy the hot tub now.
Exactly. But that's the point is, look at your house. Everybody's house, most of them are going to have Whirlpool appliances. They're a major player in a sector that, hey, when you're getting some of these extra stimulus checks, when you're starting to have some of that extra disposable income, Whirlpool is going to be where you get a chance to upgrade. So they're going to get a boom here.
Yeah, not even just that. It's more of, instead of people spending money on the travel or spending money on going places, they're like, hey, let's do a little DIY project. Let's renovate the kitchen. Let's do something, here special instead of spending it elsewhere. So kind of going with it, the housing boom that we're going through as well right now, this plays a huge part. Whirlpool has got their hand heavy in the mix right now.
Yeah, and I actually don't own Whirlpool or a company like Whirlpool in my portfolio, so it could be a chance to diversify my portfolio further. Running through the metrics at the time of this video, stock price $240, forward earnings of 23.61. That's a PE ratio of 10. In the current market's over 40, that's really what caught my eye with this company.
Price to earnings ratio, and that's on a go forward basis. You know that the S&P 500 doesn't even touch that. Or like you said, they had a nice dividend increase, bringing that dividend to $5.60. So taking that over that massive forward EPS of $23.61, you're looking at probably one of the lowest payout ratios I've seen, and unexpectedly have seen at only 23.7%.
Exactly. That's not even it's below our perfect payout ratio too, which makes it crazy. So then once you start peeling back the layers of their dividend increases too, their 5-year average growth rate is 6.42%. And they've increased that dividend for 10 consecutive years now. So not a dividend aristocrat, obviously, but they are well on their way to becoming one.
Guys, with that 12% increase, that yield is now 2.33%. Guys, if you're watching this here, I know it's being released here on, May 13th. Ask right now in the comments, Bert, did you buy this today? Bert, are you buying Whirlpool stock right now? Is this a stock to buy right now?
Well, Bert, we'll see in the comments. I can't buy it right now. The markets are closed when we're filming this, but we'll see. I'll let you know in the comment section. We'll see what tomorrow will bring. But see, Lanny, I told you, Lanny, the metrics, when you run them, they just surprisingly look right. I don't know why, but I had to put them on my watch list after seeing this.
Pulling like a Kyrie 2017 finals where he finally goes on a tear and he's like, I told you.
Yeah. I don't know if Whirlpool's going to be that shot for me, but let's see what dividend stock number 3 is. And maybe this is the Kyrie of it. We've talked about this company in the months past. It kind of fell off our radar as the stock price for this company climbed. Now it's come crashing right back down, and it is right in the potential buy range. That company is Intel, ticker symbol INTC. They were well over $60 a share just a few months ago. So yeah, it is trading right now at 53.62. So yeah, it has come down a lot since their highs in 2021.
The Intel stock price has come down. Obviously, everybody's afraid of the chip shortage that's happening right now across the industry in general. So if you actually look at the last, I don't know, Bert, maybe the last month where they're trading at about $65 a share this time last month, chop down $12 off of that, and you do the math, that they've just been on a slide downwards, headed into May 13th here.
Yeah, so looking at the metrics with that decreasing price, obviously 53.62 at the time of this video. Forward earnings are $4.63. That's a PE ratio of 11.5. So just above Whirlpool, but still way below the S&P. Annual dividends $1.39. Divide by that forward earnings, that gives you a payout ratio of 30%. Look, yet another company that has fallen below our perfect payout ratio. They've increased. Oh,
don't count Intel out. That's all I'm going to say. Don't count Intel out.
They may be down, but they're not out yet. Their 5-year average dividend growth rate is 6.28%, and they've increased that dividend for 6 consecutive years, too. So, hey, not bad numbers right there.
I guess a hell of a deal. No, but it makes me think of Rikishi doing a Rikishi bomb off the turnbuckle here. But
feel bad for that stock that's on the other side of that. That's for sure.
So yeah, Intel, INTC. Now, Bert, I know you've already owned this in your portfolio. Did you buy them this year in 2021?
I have to look back to see when it was. I'll put up the image. I think it was either at the beginning of last year, or definitely at the end of last year. We were adding them to my wife's portfolio. It was in the 40s is where we got them, and then we kind of stopped buying them. I have to look at the exact timing.
Intel's one of those legacy iconic companies. You kind of look at them and IBM almost in the same light, except Intel is still heavily used. Their chips. I mean, what can you say about it? I think it's a great company still. Metrics are sound. The battle now I think might be between Intel or Whirlpool.
Did not see that one coming, did you, Lanny?
No, it's a hot take right here.
Yeah. So everybody, there they are, 3 companies. I'll put the chart up so that you don't have to hear me repeat the metrics for each one of them. But I think the cool thing about them is all of them have payout ratios below 50%. They all have 5-year average dividend growth rates above 6%, below 6.5%, and dividend yields in the 2.3 to 2.6% range. So they're all kind of similar, but slightly different.
Tight range.
Yeah. It's usually different because we usually have higher yielding companies on our watch list. So it's refresher to see some lower yielding, high dividend growth ones.
I mean, Whirlpool may edge it out with the dividend growth rate right now. I mean, Bert, the solid companies right here in this overvalued stock market. We need some more red days right now. And, the reason why Bert likes that low payout ratio is that really resembles the safety in the dividend, not only from just any cut going forward, but also knowing that dividend increases should continue going forward because of how much earnings is available for an increase.
Exactly, Lanny. And what's cool with Whirlpool is their ex-dividend date is May 20th, 2021. So there still is time to capture that increased dividend that we'll be paying on June 15th. So there we have it. We'll see. I'll let you know in the comments if that's going to be the stock that's buying as you're watching this video. So we'll find out.
Bert's going to say, your Whirlpool, you put it in your portfolio. Let's see it, Bert.
Yeah, so let us know in the comment section, everybody. What stocks are you watching? What do you think of the 3 companies that are here on my watch list? If you haven't already, please subscribe to our channel. Help us get to 10K and give this video a thumbs up so we can keep bringing you dividend videos and personal finance news.
Guys, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.